Hello, today we're going to talk about Fibonacci and how you can use it to trade the Forex markets. Now before we get started, there's a couple of things you need to know. Fibonacci comes in two forms, retracements or extensions. Now to understand what Fibonacci retracements are, you have to understand what a retracement is. You have to understand that the market's not going to move in a single direction without a single pullback or a single stall. So these little retracements or larger retracements can be predicted using the Fibonacci ratios. These retracement areas are extremely high probability, and if you find the right candle patterns in the right area with the right retracement, then it can become an extremely profitable trade. Now there's no secret in what the ratios can be, as these are already predefined in your MetaTrader platform. The trick is knowing where to draw them and how to draw them. And the best thing to do here is just practice, is what I tell people. Okay, as you can see here, we're looking at the Euro USD 1 hour chart live on the 9th of April 2010. Okay, there was a number of trades popped up today on the 9th of April, which I took on to highlight to you guys the power of Fibonacci. So if we go about and getting the study out now, and you can see, I'm just drawing it here on the 1 hour chart. So I'm going from the high, which is there, down to the low, which is there. Now don't be too intimidated if you don't understand why I've drawn it in this position. It's all to do with wave counts. So if you follow Elliott wave, then this is this is the wave, the last previous wave that you want to be Fibonacci. You want your Fibonacci retracement to be on. So you can see the high here is at 133.83, and the low is down here at 132.81. Okay, from this example here, you've identified that the last wave is here, and you've drawn your Fibonacci study. The next step to do is to identify whether the market's in an uptrend or a downtrend, or whether it's neutral. Okay, so how do you do that? Okay, so if you come back here, you can see the market's making lower highs and lower lows. So that indicates that we're in a downtrend. You can see there's a high here, which is lower than this. And this low here is lower than this. If you come down here to where we've just Fibonacci studied, this low here is lower than this over here. So we're currently in a downtrend. Okay, fair enough. Okay, the next thing to note is this high here, which is at 133.83. Now this is actually higher than this area over here. So the market's either now going in a sideways direction or returning back to the upside. We don't know. So this is where the Fibonacci study can really help you out and identify the real high probability trades. Okay, so as the market retraced back down to this region here, in this particular case it's 38.2. This is the 50% and this is the 61.8. Now if you look at my Fibonacci studies, they're backwards because we want the extensions to show up to the upwards direction. Now if you want more information about that and why they're backwards, in this particular example, then just give me an email or a forum post, and we'll go through that in more detail in another video. Okay, anyway, so how do we go about using these? So you can see the market's pulled back to this region here, as I said, which is the 38.2. Now this is obviously a nice area to be getting long, as you've identified the fact that the market's now put in a higher high. However, you're not sure whether the market's going to go in a sideways direction or return to the upside. So here you can kind of hedge your bets. You can go down into smaller time frames and gauge an entry of this region here. So buying it at the 38.2, the 50% or the 61.8 are really high probability trades. Now how you identify them, as I said, is to go down into the lower time frames. Okay, so you want to be looking for hammers, engulfing patterns, morning stars, dojis, those candle patterns which indicate kind of lack of momentum to the downside. So the market's going to return back to the upside. Okay, so moving on from retracements, you can see I've also got extensions on here as well. So how do you use these extensions? So there's lots of videos on YouTube and lots of different lessons around about saying you should use this line and this line. Okay, to keep things simple, not to go into too much detail regarding the theory behind Fibonacci and Elliott wave, etc. You simply count on 3 lines from where the market has previously stalled. So you can see the market here is stalled at this line here. Don't forget about the ratios at this particular time, so that you can see that the market's here where my mouse is. That this is 1, this is 2, this is 3, and this is 4. So you just count on the extensions, providing that you have them configured properly. If you need the configuration and the ratios, then please email me or check the site, fxtrainingzone.com. We'll be happy to tell you what the ratios are. So yeah, you count 3 on, and that's your primary target, as you can see here, which is, in this particular example, is the 121.3, and the secondary target here is 138.2, which is exactly where the market's gone to a couple of pips. So that was a particular trade which you guys could have taken on from this hammer here, which is a nice don't forget this is the hourly chart, remember. But yeah, this is almost a hammer signal here, indicating the market's really hammering at the bottom of the retracement, and then it's going to obviously return to the upside. So this was kind of a nice trade which you guys could have picked up on. Okay, if you're a counter trend trader, you can also use these extensions as an entry point to back down to the short side. So in this particular example, you can see the market's moving in an upwards direction. Where if you did want to get short of this and you did want to go counter trend, if that's your particular style, then where would you want to be getting short? Well, you can either be getting short here at the 121.3 or the 138.2, and that's exactly where you want to be getting short. You can see the market did pull back for a nice 50 pip move back down. So providing you have the Fibonacci study in the correct place and you understand the ratios, then it's quite a profitable strategy. Okay, so I just want to show you guys that it does work just as well on the short term as it does on the long term. Okay, I get a lot of questions asking me whether my strategies, whether the strategies I use work well on the short term as well as the long term. As you all know, I trade much more longer term. Okay, so just to prove to you guys that the stuff I do teach works on the shorter term as well, we want to go through drawing a live Fibonacci study now on the 5-minute chart for the Euro USD on the 9th of April. You can see now if we draw the Fibonacci study from this high here all the way down to here. Now some people are going to ask me why I didn't include this high up here. Now I'd class that as a kind of an overextension to the wave. I wouldn't class that as being the full wave. That's just with experience really. So if you really practice your Fibonacci studies over the years, you'll kind of get a grasp of where the wave where the wave ends and where it begins. And this is where I class the kind of the wave to be really. Okay, as you can see, the market has rallied up here aggressively to 134.67, that sort of region. Now, some people would have obviously jumped on this move coming up here. Now, I'm more of a conservative trader, and what I was looking for was a pullback to the 38.2 or the 50% retracement line, and that's exactly what happened here. You can see the 21 EMA is there as well, so you've got added support, and that's exactly where you want to be getting long, and that's exactly what we did in the live session. So yeah, that's where you want to be getting your longs. And then obviously what we've just said is you're looking for 3 lines or extension points on from where it retraced to, which is this region here. So you can say 1, 2, 3, and that's exactly where you want to be exiting your longs. You can in that sort of region there. Not a massive gain. It was a good little trade which netted us about 65 pips, I think. So not a massive gain, but not bad for a 45-minute trade, which is pretty good for the day. Okay, so you guys are probably going to have lots of questions behind this Fibonacci ratios and extensions. If you want to know what they are, then please do visit the site fxtrainingzone.com. Failing that, then please do get in contact with me via email, forum, or Skype if you've got any questions, and hopefully I can resolve them. Also, could you please rate and comment on the video as it helps other people learn. Cheers.